this this live situation over here. Um, yeah, yeah, y'all. I've been like sick lately. Been battling a few different things. I had a some type of virus when I got back from Utah last week. Symptoms felt like COVID symptoms, um, COVID negative. Then they started going away. Then they came back. So the doctor told me I had to take some antibiotics and stuff. So yeah, I mean that's enough of all of that. But yeah, I'm good, y'all. I'm good. I just been just trying to endure. Just a challenging month. This last month has been challenging. So um, I also had a minor heart attack in early March, and so I've been having to go to rehab for that. Luckily, it was a small artery, not a major artery, but I had to make a lot of dietary changes and such. So, so yeah. So excuse me. So I'm just living life and trying to just make the changes I need to make to be healthy and be around a long time. So appreciate y'all supporting me and riding with me through everything. So I want to talk a little bit about just going risk off and some of my thoughts about just the current financial climate and environment. Um, you know, I've been thinking about the Fed a lot and just inflation is really bad right now. I had some charts I was looking at, especially on Zillow. You look at rent inflation up, 17%. Mortgage rates are up, close back to 5%. I remember we bought our home in 2019. We had a 5.125%, and then we were able to actually refinance, and so we refinanced to a 3.125. So that made our payment cheaper, but we also bought our house at a good price. So I think that we're in a good situation. Um, so I've been looking at things like that and just like, okay, well, now people are having higher mortgages for less house. A lot of people can't afford some of these mortgages. I mean, we went through a whole just crazy period of people outbidding each other, people, um, bidding over asking price, waiving inspections, just mass mania in the housing market, and people just wanting to get in the house, and it was just crazy, And I just think about like how much hype that is, how much fear of missing out that is. And, um, so thinking about that, I'm just like, what's going to happen with the housing market? The Fed has to fight inflation. Inflation is, um, I believe, at an all time high. I mean, they're saying that it's the last 40 years, but I don't believe the numbers that the government gives us. So inflation is at a all time high, somewhere around 10, 15%. And the Fed has to tighten. They have to suck some of this liquidity out of the system. They have to raise interest rates as much as they can. Obviously, they're in a pickle because they don't want the government to default on their debt, right? And the higher interest, I mean, the more money people are going to pay, corporations are going to have to pay on their debt. My cousin just called me earlier and told me he had his credit card payment and he ended up paying about $350 in interest. And so, yeah, so it just got me thinking like, okay, well, I really want to, make sure I don't have that type of credit card debt, and knock mine off and stuff, even though I use mine strategically. And, just thinking about all of that stuff is just like, okay, that's a lot of uncertainty there. There's a lot of, fear. There's a lot of, um, you know, just risk off sentiment out there. Right now, I saw the markets just kind of just bounce back the other day. Bitcoin rose, all the tech stocks rose, and everything. And people are like, "Oh yeah, it's over," and I just don't think the pain is over yet. I don't think that the that we've seen the worst yet. Things are just heating up, globally with these sanctions on Russia, the prices of energy that's just continuously skyrocketing, the food shortages. Um, I read an article earlier just about Peru, and they're having some huge civil unrest because of inflation and food shortages. And it's just not a good environment to be risk on. And so when I say risk on, that means you're willing to invest your capital in risky assets, more risky assets. So, for example, growth stocks. Um, when you look at Elon Musk buying or owning like 9% of Twitter shares, the stock just popped like, 12, $13 in a day. Excuse me. The stock popped about 12, $13 in a day. And, just thinking about that, it's like, is that really sustainable? So that's more like the risk on environment where you're, gambling in the meme stocks. You're getting into the quote unquote shit coins, altcoins, Shiba Inus and Dogecoin and all of that, and you're willing to take more risk with your money. And so that's a more risk on environment. So usually when we have recessions and things like that, people go risk off. So they either sell stocks for cash, so the dollar may spike, so that they can protect themselves against a crashing market. Um, they may go over into bonds, just as a short term safe haven. They go into gold, think assets like those, and so what we're seeing is a lot of that. We're seeing institutions come in and buy some of these stocks. They're selling them off. I already knew, like for example, Apple went up a few days in a row. I knew to short Apple, and I made some profit. Um, and I was just like, it's just not realistic that this stock is just going to keep having a positive day, you know, 10 days in a row. So I shorted it, and I made money. Same thing with Twitter. Twitter jumped so high, and it was just like, yeah, this is just buyers' fear of missing out. So they're all jumping on the train, and I shorted it, made some profit, right? So I'm just really considering myself just more going risk off. So I did, sell some of my equity positions to be able to have more cash, reducing my debt, reducing, reducing debt. That's a big one. Also, just having cash to be ready for just whatever happens, and if there's any dips in the market, any market corrections, which I believe there will be, then you can actually come and get a lot of these stocks at a huge discount. Um, so other ways people go risk off is they'll go into bonds, they'll go into just more of the um, safety plays so that they can actually, themselves against, so they can hedge themselves or whatnot. I don't know what the heck happened. YouTube straight up just gave me a notification in the middle of the dang video, and I was just like, "What is that about?" And then I accidentally clicked on it and just took me off or whatever. But whatever, that's weird. Why would you do that on live? Um, so yeah, so it was a lot of people going risk off. I just think that that's the more safety play for me, the more conservative play to preserve some of my wealth and be able to um, take advantage of any big dips in the market. So that's kind of what I'm thinking about right now, and just want to protect myself and my wealth. I'm not gonna go fully risk off, but I'm gonna take a good percentage of my portfolio and play it safe because I think that we're gonna head into a recession. I think that the markets are gonna go down even further. Um, markets don't just drop in one straight shot down. They do have bounces and they bounce back up. And I think that what we're seeing is just a bounce. We're seeing a bounce off the lows. What up, JT? Um, yeah, so we're seeing the bounce off the lows, and I think that we're going to continue to see some downward action, especially as the Fed is coming out being more hawkish and everything. Obviously, the Fed doesn't, they can't raise interest rates too much, so they may have a pivot to where they have to flood the market with more money. The market's going to rally again and such, but I think there's more downside while they're speaking this hawkish tone. And I mean, we'll see what happens, but I know that these markets can't just go up straight forever, forever, forever. There has to be a cleansing of some of the money in the system. I mean, especially the cryptos. There has to be a cleansing of all of these coins. I mean, there's tens of thousands of coins, and not all of them even serve any good purpose. They're just there for speculation, there for people to gamble and everything. So there's gonna have to be some type of wave that just flushes all this out, and I just feel like that's what's gonna happen sometime this year. So I just rather be on the safe side, play more defensive stocks, some defensive stocks or healthcare stocks, and then obviously you could play bonds, go into cash, gold, just to be able to hedge your wealth and not lose, take a half haircut. So that's kind of just my thoughts. I also do some stop losses as well. They're not always reliable, but sometimes they are. So I figured, why not? And I have a lot of capital in dividend paying stocks, so at least I'm getting paid to hold those shares versus, buying a Tesla where you don't get paid to hold the shares. And if Tesla, tanks and drops, 30, 40%, then, you're in bad shape. I mean, you can always buy the dip, but you gotta have money to buy the dip. That's what people keep saying, buy the dip. You gotta have money to buy it. So you gotta have capital to be a capitalist. So, well, that's all I wanted to share with y'all today. Just wanted to give y'all those thoughts. I got a lot of content coming up. We're gonna talk about Russia pegging the ruble to gold, which is gonna be pretty interesting to see how this plays out. And we're going to talk about a few other things. We're going to do some more videos on technical analysis. I've been learning a lot on that and just charts and everything and just trying to get more comfortable, but I've been learning a lot more. So wanted to be able to share that information with you all. So y'all have a good night. Hope that y'all stay safe, protect yourself against any type of, market crash or whatnot, because it's looking kind of scary. The economy is not looking good. It's not looking healthy at all. So I want to encourage you all with that. All right, y'all. I'm going to get some rest. Y'all take care. Peace.